Welcome to the video on how much capital you require to become a full-time trader in the market. Now what I've done here is that I've summarized my experience in full-time trading, and then I've given out a template, a guideline as to how much capital a trader will require. Before I get down to the number, I'll explain a lot of things with respect to trading and investing capital, which is actually required in full-time trading. And there are no books that cover this because it's a very personalized subject and you really have to walk the path to know all of these things. So the first thing I'll tell you is that once you become a full-time trader, that is once you've made a transition, then you gotta understand that your majority of capital, something like 70 to 80% of your money has to be in investment. You will have to develop this habit early because do not forget, it is investments that give you wealth in the market. Trading will only give you income to sustain from day-to-day basis. Investing is highly rewarding in terms of returns, in terms of being tax efficient, dividends, splits, bonus. There is nothing that can beat long-term investing in the market. But initially, even when I started, it is not investing where my entire money was. What I initially did was I had a split of 50-50% kind of capital. That is 50% capital went in trading and 50% went in investing. Why in investing it is important? Because even if you're starting with a moderate capital and that grows 2-3 times in a bull market, then it becomes really easy for you to become a full-time trader in the market. And meanwhile, you can use the 50% remaining capital to generate regular income. Before I move to the next section, do not forget one thing, that when it comes to becoming a full-time trader in the market, or even if you're dreaming today about becoming one, maybe 5 years down the line, compounding your money is the most important concept you will need to understand. And this only comes with long-term investing. Compounding for you is your best friend. That is if you ever dream of becoming a full-time trader. So before we move forward, please note that there are over 200 free videos available on this channel for you to learn trading and investing. Just go to the link here. I'll make sure the link is easily visible. Also, when you click on the playlist, each and every video has been organized in a playlist so that you can learn in a proper sequence, take notes, and get better at trading and investing. And make sure you have clicked the subscribe button and the bell icon. This is the only way you will get notified when a new video is released on this channel. And if you think our videos deliver value to you, please consider hitting the like button because it really helps out our channel. So let us now begin with the very basics of what is trading capital. See, in my own interpretation, trading capital is required for 3 main purposes. Number 1, planning for emergency fund. I'll come to this. I'll explain this in detail. Number 2, meeting your bills and expenditures. That is throughout the year, you will be making a lot of expenditures in your life, whether it is related to your health, family, all those things, electricity, basic food, basic travel expenditure that has to be taken care of trading. And number 3, contributing back to your investment fund. So I'll just explain these things in detail. The first thing is about an emergency fund. Remember, you are going to be a full-time trader in the market. You need to have an emergency fund that you can dip into in case there is some sort of emergency in your life. Recent times have taught us that anything can happen in life. That is why emergency fund has to be there. How do you build this? I'll come to that in detail. But for the time being, post taxation of your income and your expenses, expenditures, and some contribution to your investment fund, that is long-term fund, whatever amount is left, that has to go to emergency fund. Again, this particular part I'll explain in the mid part of the video. Bills and expenses is pretty clear. I don't have to go into the detail. This will also include, fees of your children. Maybe you have other dependencies in your life. All of this will be coming within bills and expenses. Now, contribution to investment fund is something that you should again build this as your habit. The main reason being, let's say you make 100 rupees post taxation, just for ease of calculation. Now what I advocate is that you can spend about 70, let's say it goes for bills, expenses, 10 should go for emergency fund, but 20 should be going to your long-term investment fund. The main reason being is that there will come a time in your life when your investment corpus, your investment portfolio will become so big that your dividends alone in an year will take care of your bills and expenses. I have reached this stage in my life where bills and expenses that I have yearly are taken care by dividends alone. a large portion of it. And when the business cycle is good and a lot of companies are giving out dividends, that year comfortably all the bills and expenses are just taken care by dividends. So do not underestimate this. For a full-time trader, long-term investing is a godsend opportunity, mainly because as you remain consistent, as you generate more trading returns and keep contributing back to your investments, your investment portfolio alone one day will take care of all your bills and expenses. So this is my take on how you should be thinking about trading capital in your life. It is about emergency fund, bills and expenses, and then contributing back to your investments, because this is what will truly liberate you financially over the years. So let me now explain how you need to divide your trading capital initially. See, what I advocate is that if you have less than 3 odd years of experience, maybe 4 years of experience, you're becoming profitable across all types of market cycle, then have a 60-40% split initially. That is 60% of your capital should be in positional trading, which is actually a longer form of trading. This is both long trading and short sell kind of trading. This is where 60% of your capital should be initially. And then 40% can be in swing trading. In case you are good at day trading, you can also use some capital here. But this is the initial sort of division I suggest in the market. There is also one more variation, especially as you gain over 5 years of experience of being profitable, more importantly, of being able to protect your capital. You can look into options. This is an excellent way of generating income from the market. That is when you sell options. Again, for this, you will need some expertise. A lot of beginners attempt this. That is something I always discourage. But once you get really good at positional trading, swing trading, then getting good at selling options is not at all difficult. That is why there is a transition that needs to happen. If you are taking the step of becoming a full-time trader after some good track record, then of course positional and swing is something that you can experiment for the next couple of years. But if you get really good at reading the market, if you get really good at identifying support resistance levels, then you should be looking into selling options as a full-time trader. This has to be once you get experience in the market, because in this, the relative capital that will be required will be also less. And more importantly, your success rate will be a lot higher, because in the end, most of the options go ahead and lose the premium value. So this is something you can definitely look into, but begin from here. This is what I did. I began with positional trading and swing trading. I did not have a split of 60-40. Actually, I had a split of even 80-20 here. That is, most of my trading capital was also in longer form of trading, whether it is I'm buying something for the long term, maybe 6 to 12 months, or short selling something. I always aim for 6 to 12 months kind of trade, because that is where you can capture the entire trend, give price to be enough time to be volatile, and still the trade to work in your favor. So options is something you can definitely look into once you gain experience in the market. So let us now understand what kind of expenditure a full-time trader needs to take care of. Remember, you are not in a corporate job. You don't have an insurance cover. This is why the insurance part is something that you need to handle. We live in a culture where we take care of our parents, of our spouses. Hopefully, a lot of you take care of your spouse's parents also. So you have to make sure that you have enough money to cover for any medical emergencies that come about. This means you will have to spend higher premiums, because your basic insurance cover needs to be more. Do not forget, it is you who has to take care of all the medical bills. A full-time trader is not blessed by having a support of a company that will pay for any sort of medical expenditure. This is the most important point, because we are always more worried about our loved ones. You also don't get any salary hike, no yearly bonus. This is a very difficult pill to swallow, especially if you have done a job and then you're trying to be a full-time trader. But this is a psychological thing that you will have to get used to. Then there is a regular kind of expenditure. In this, you should be having house insurance, travel insurance, life insurance. There are school fees, miscellaneous expenditures. There are so many things that can come in this section. Even day-to-day household expenditures, especially if you have EMI, loans, liabilities, then think twice before becoming a full-time trader in the market. It's not easy to have a lot of EMI loans over your head and then simultaneously trying to become a full-time trader in the market. If you have a lot of EMI, a lot of debts, a lot of loans, then you should be doing a job and then look into part-time trading. Remember, the market is not going anywhere. Therefore, what I would tell you is that take care of all your financial liabilities, get better at your job, get good amount of capital, and only then take the plunge of becoming a full-time trader. The third kind of expenditure you'll take care of is the traveling expense. Now, don't forget, as families, everybody needs holidays, trips, recreational activities. Then there are festivities, so many unplanned expenditures. You will have to note down everything in detail. I've done a personal finance kind of playlist also, videos that you should be watching. Check the comment section for the link. But the key here is that the detailed expenditure notes that you take every day, that will actually help you plan your financials better. So for those of you who are channel members, please note that tomorrow in the community section, I will be releasing a detailed note about the strongest stocks and sectors in the market. Keep your notifications on and be active in the community section. And positional trading members episode has been released. Please check the community section for the link. And those who are new channel members, in the price volume section, there are 5 main playlists. In the first playlist, I've covered all the basics of price volume analysis. Second series is about the detailed pullback trading setup, where entry, exit, stop loss, stock selection, all of these things are explained. Third series is about pivot range, POC analysis. And there's also an application series where I daily update videos just to show you how the overall market structures are developing. Positional trading members, you have 2 main playlists. The first playlist is about the entire positional trading setup in the market. And the second playlist is about VWAP method of trading, that is with respect to day and short-term trading. All the 3 modules are accessible here. Again, link to all these videos is given in the community section. And all channel members, do not miss out my post in the community section that I write every day about the market and the developing structure. This is where you'll understand how you need to think in terms of building positions and adjusting with the market cycle. So let me now tell you the importance of emergency fund and why this is the lifeline of a full-time trader. See, what I believe personally, the day you decide to become a full-time trader, hopefully by then you would have taken detailed notes about your expenditure. On that particular day, in your bank account, you should be having at least 24 to 36 months of expenditure money already lined up. And this is separate from your trading capital. Why this is important is because even if you don't make any money for the next 2 to 3 years, this will not impact your family life. This is important because this will help you focus better on trading and investing. Because if your personal life, family life is disturbed, let me tell you, this will reflect in your trading performance, and over a period of time, you will begin to lose money. So the day you decide to become a full-time trader, make sure you already have emergency fund that is set up, and you should be having minimum 12 to 36 months of expenditure money in your bank. So once your emergency fund is set up, it is important to park this money somewhere. What do I mean by this? Now, this money should not be there in the stock market. Don't bring it to trading. Don't bring it to investing. This should be in much safer, risk-free options. Now, this can either be in liquid Bs, or it can be in fixed deposits, recurring deposits, or any other high-yielding deposits that is virtually guaranteed. But the thing is, this money is the kind of money that you'll never take any risk with. And this is the money that will bail you out in case you don't make a lot of returns over 2 to 3 years, or you face any emergency in your life. So this is as important as trading capital, that is the emergency fund. And that is why you got to keep putting money into this emergency fund, so that over a period of time, you also reach a comfortable level where you won't be able to think a lot in terms of attending to any emergency in your life. So the main use of emergency fund, of course, is to help you deal with the unpredictability of life. And more so, recent times, COVID related times have shown how important emergency funds are in our life. It will also keep your psychological health in a relatively good place. And that again is priceless when it comes to full-time trading. So let us now get down to how much capital do you actually need to become a full-time trader. Let me tell you, there is no universal number that can be applied to any person. At times you will hear that in 5 lakhs you can become a full-time trader. Somebody will tell you it is 15 lakhs. Somebody will tell you it is 1 crore. Somebody will tell you it is 10 crores. The thing is, nobody can suggest this number for you because nobody knows what kind of expenditure you have in your life. Nobody knows what kind of liabilities, what kind of loans you have in your life. So stop hearing this random number about what is required to become a full-time trader in the market, because honestly, whoever is suggesting any number to you has no idea about your lifestyle, about how you spend your money, how much liabilities you have. So that is why you need to work this number out by yourself. In my opinion, Trading capital is a function of expenditure, savings, setting up an emergency fund, and then your ability to invest for the long term. Do not underestimate this, because over a period of time, it is investing that makes your life a lot more easier. So let me now take you through some calculations. There are 3 stages that you require for calculating trading capital for yourself. Remember, these are just guidelines. You will have to figure out the number by yourself, but by the end of this video, you will completely understand what kind of variables you need to consider. The first step is, of course, taking note of all expenditures. Now, for the ease of calculation, I'll assume that we are taking capital into consideration for a person who has an expenditure of roughly 1 lakh per month. And as a trader, do not skip this step of making sure to calculate how much expenditure you have on a month-on-month basis, because this is the number that you'll require to finally determine what kind of capital you need in your life. The second step is planning. Now, once you have figured out that 1 lakh per month is what your expenditure is, then this would mean that 1 into 12 lakhs you will require per annum. This is post-taxation figures. Again, I'll come to the calculation part later. What I recommend is that set aside another 10%. That is, on this 12 lakh, add another 10%. That would be roughly 13.2 lakhs annually. But this 10%, let it go to emergency fund or investments. That is what I recommend, because again, importance of emergency fund cannot be ignored. The third step is to have a decent rate of return that you need to take into consideration while trying to calculate the numbers. We are in a bull market. We are moving 20% every month, 15% every month. A lot of beginners are doing this. They are posting as if stock market is so easy to trade with. It's not. This is not the reality. The reality of stock market is that over a period of time, any good trader should be making something 20 to 25%, that is closer to this figure in terms of compounded return. That is, over a period of 5 years, you should be able to generate 20 to 25% compounded return. Again, the illusion that the current market cycle is giving you is that 20 to 25% is relatively easy. Don't fall for this sort of way of thinking. 20 to 25% per annum compounded is achieved by some of the greatest traders in the world. That is why have a realistic return sort of expectation. This number you will reach over the next 3 to 5 years as you gain experience in the market. This is the truth, whether you want to believe it or not. There is no shortcut in the stock market. Now, before I open up the Excel sheet to explain the exact figure, one thing I want to tell you is that selling options for income is a valid approach in the market. A lot of you have asked me about this. I generally discourage beginners from doing this, but yes, selling options is a valid approach. There are just 2 things you'll have to be careful about. Number 1, your risk management has to be of the highest pedigree. That is when you can make use of selling options to generate consistent and good amount of income from the market. And number 2, your capital requirement. Let's say in the next slide, we arrive to some figure. That figure will be a lot less if you just use options to generate income from the market. But again, you will need to know how to sell options. And this is something that only experience can teach you. One more thing that I want to cover is 3 psychological points. Number 1, focus on lowering your expenditure. Again, in the slide ahead, you'll understand why this expenditure figure is so important. Number 2, always have an attitude of hoping for best in life, but plan for the worst. Always have emergency fund, keep contributing to it. And number 3, again, I'll come back to this emergency fund and the importance of it. You should be adding, and then again adding a lot of money to your emergency fund. The higher the emergency fund is, the easier it gets to become a full-time trader in the market. So let me now take you through some calculations. So let me now explain the calculation part. This will sound a bit disappointing for some of you, especially if you're a student, but this is what I've learned from my experience. Whether it is something that you agree with or not, that is something only time will tell. But let me just explain, give it some time to understand what I'm trying to explain here. So if I'm working with a figure of 1 lakh per month, that is an individual who has an expenditure of 1 lakh, this includes everything, he would require 12 lakhs per year, that is 1 lakh into 12. And I also advocate 10% of this amount should go into emergency and investment fund, that is completely optional. So this would be 12 lakhs plus 1,20,000. The total amount per year that will be required is 13 lakhs 20,000. Now this amount is the in-hand amount that you'll require. Therefore, you will have to back calculate in terms of taxation. So if you live in a region where your taxation is 30%, and just take a note here, I have not taken into consideration our country's tax bracket system. It's mainly because a lot of my audience is from the US and the UK as well. So if you're in a region where your taxation is 30% and you need to generate approximately 13,20,000 post-tax income, then your total income pre-tax will need to be 18,85,700. So this is what you will require. Now to generate the 18,85,714 income pre-tax, assuming you can generate 25% per annum, the capital you'll require is 75,45,000 roughly. Now why this number and this number is important, let me explain. Let's say you get really good over a period of time, your experience level reaches to a stage where you can read market cycles well, and you can generate something like 35% per year, then the capital requirement goes down drastically. Whereas if you look at your trading history and you can generate only 15% per year, then look at the capital requirement. It shoots up to something like 1 crore 25 lakhs. This amount of trading capital you will require to generate 18,85,000 pre-tax figure. This is the reality of full-time trading. It is not a number that anybody can suggest. There is also one number that is important, that is your expenditure. If you're someone who can live a real frugal lifestyle and manage everything in 75,000 rupees, look at the capital requirement, it comes down to 94 lakh rupees. That is why I mentioned that calculating your expenditure is so important initially. Taking care of anything that you're overspending. Any penny that you save in the stock market is the money that you will compound over a period of time. Now what I have here is the same calculation. It is just that I'm not contributing to the investment emergency fund. I'm assuming there are also people who already have a house, who already have some sort of capital support from family. So they don't need to go back to the investment or emergency fund. For them, the capital requirement obviously will be a lot less, mainly because they have financial support. But most of the traders in this community that I have encountered, they don't have that much of capital support as such. For them, this is the realistic figure. Let's say your expenditure jumps to something like 2 lakh per month. You are living out of your comfort zone and you're spending a lot of money. Look at the capital requirement. It's 2 crores 51 lakhs. So assuming you have 15% sort of rate of return, if that is 25%, it drastically goes down to 1.5 crores. But the two most important variables that you need to take care of is expenditure and return per year. That is why if you begin at an early stage and you get some amount of skills, experience and support from your family, it gets a lot more easier. But make sure you have a track record of 3 to 4 years of not losing money. Don't go behind returns generated per year initially. That is a figure that can get skewed because of bull market. You need to have the skill to protect your capital. That is the only way you will become a full-time trader in the market. So before I move forward, my just request to all of you is just listen to what I have to say over the next 2 to 3 minutes. There are two things I'll share right now. Number one, it's about guidelines for some beginners who are very new to the market and who intend becoming full-time traders. And the second guideline is with respect to capital. This is mainly for those who are already working, doing very well in life, how you need to progress. There'll also be a separate video for this, but I'll just introduce you to some things. First, for beginners, I know a lot of you students or people who have just started working in life, you would be highly demotivated by seeing the calculations that I've done, that is requiring over 50 lakhs, 75 lakhs, 1 crore of capital. And mind you, that is just trading capital. You will need another 1 crore or maybe just double the amount. That has to be in investments also. See, everybody in the market who has been a full-time trader has gone through what you are feeling right now. That is why financial planning, being judicious in how you spend money, not throwing away money on luxurious items just to please someone, this is extremely important in your career. The sooner you start to manage your money better, the easier it will get. And always remember one thing, I am here to share my experience. I'm not here to please anyone. It's very easy for me to tell you it only takes 10 lakh rupees to become a full-time trader, which is just not possible. Unless and until you are this super experienced option seller who can generate 20-30% return every month on the capital, it's just not possible. And even with the recent margin guidelines, it's become a bit difficult for option sellers also. The one thing I'll tell you is that in stock market, there are a lot of people who are selling you false dreams that becoming a full-time trader with 5 lakhs is very easy. Just take my 90,000, 80,000 kind of course. They have an ulterior motive, but you gotta think practically. You are the one, remember this statement, you are the one who needs to pay the bills for your family. It is not the one who's selling you false dream. And yes, if somebody is telling you you can become a full-time trader with a capital of rupees 5 lakhs or 10 lakhs, that is selling a false dream to you. So that is my remark to you, that if you're a student, get good grades, get a good job, get better at job, and start saving money. The more you save, the more easier it will get to become a full-time trader. Meanwhile, keep studying charts, keep gaining experience in the market, part-time experience. That will certainly come in handy. Now, for those of you who are already doing very well in your job and saving a lot of money, let me tell you one thing, that capital size definitely matters a lot. And why I will tell you this, hypothetically, let's say someone has a portfolio of 5 crores. Even if he gets 2 to 3% dividend every year on that portfolio, he can easily match or pay for most of the expenditures that come about in a month. That is why never underestimate the importance of capital size. I will come to a detailed video of how to arrange the first 50 lakhs to 1 crore. This will be a much detailed subject. This will come out in this series itself. But again, for those of you who are already doing well in life, you can also look at option selling. This certainly can help you lower expenditure. That is in terms of capital criteria. And this is mainly for those who already have 4-5 years good solid part-time experience of protecting capital. That is the downside of option selling. You just cannot be a beginner in the market, walk in and start selling options and start making money. If you're doing so and doing well, that is beginner's luck. Trust me on that. If you still want to do it, it's completely your choice. But the day you fail, do write back to me. I will suggest a few things to you. So option selling is definitely one way experienced part-time traders can look into in order to lower the capital criteria. But again, remember one thing, solid experience in protecting your capital is required. Now, if you intend becoming a full-time trader in the market, always remember one thing, the amount of trading capital you require will highly depend upon your expenditure, rate of savings, setting up emergency fund, and investing for the long term. The two most important variables that you need to consider is lowering down your expenditure and aim to always improve your rate of return. In the end, trading is a game of skill, and you need to focus today on skill development, the art of reading charts, the art of applying information and your knowledge to the best possible way. Take feedback from the market and aim to improve upon every mistake that you commit in the market. Now head over to this playlist if you've missed out the previous videos in this series where I talk a lot more about becoming a full-time trader in the market. So thanks a lot for watching this video, guys. Kindly consider hitting the like button if you find the content useful. Have a great weekend ahead. Take care and be safe.